Hello traders, this is Fawad Razak, the market analyst for City Index. Today is the 20th of March. So equity indices have bounced back after making a poor start to the session following yesterday's rally. And the S&P has bounced from support at around 5,620, the shaded region. It's now arrived at a very interesting area, the shaded grey area, which has been tested on a number of occasions in the last couple of days. Marks an interesting zone because this is where the election or the post-election rally commenced. So it's a key psychological area for the market, and for as long as we hold below it, the risks remain tilted to the downside. But if we go above it today, I think that would be a bullish scenario. For me, Amazon looks the most interesting stock today because it has found good support from around the 190 support level. It bounced from there a few days ago, held that bounce on the back of the FOMC meeting, and now today we're seeing some upside follow through, testing the 200-day moving average from underneath. But this is potentially the end of the near-term bearish trend, as we could be making interim higher highs and higher lows soon. The stock has tested the trend line, the bearish trend line that has been in place since early February. If it can rise above this on a daily closing basis and ideally post a close above the most recent high of 201, that would be a bullish development in my view. The other stock I'm watching today is Meta, which has found good support from around 580, this blue line here, where we have the 200-day moving average coming just below it. And judging by yesterday's price candle, a doji candle, and today's follow through, it looks like the bottom could potentially be in, and the stock has moved above the resistance trend line as well. So this is one to keep an eye on. But what about the main Nasdaq 100 index? So let's have a look at that. Well, the Nasdaq is testing the broken trend line that had been in place in January of 2023. It broke this trend line, but it didn't really fall off a cliff from there. Once it broke it, it consolidated for a few days, established a base around the 61.8% Fibonacci retracement level. The Fibonacci retracement level I'm talking about is from the rally that started in August and ended in February, so the 61.8% retracement of that. And so far it's holding firm. So what the bulls will need to see next is a potential daily close back above the trend line and key resistance between 19,735 to 20,000, which is this shaded region. A potential close above this area could pave the way for a run to the 200-day moving average initially, ahead of this next resistance thereafter. For more market insights and analysis, make sure to check out the news and analysis section at cityindex.com. I'll see you in the next video. Take care.